Now, I want to put these numbers up and just explain them to you, because this is the proportion of taxes which we as a company would never have paid if the MRRT came about, which we as a company would never have employed the thousands of people which we currently do if the MRRT had come about, all to send up a charade that the Treasurer can balance his next budget. But let's just have a look at it, shall we? 2013, 700 million royalties, 1.4 billion in corporate tax, next to no mineral resources rent tax. 2014, when we start to hit our straps, while we're doing all the work we're doing, the productivity of the equipment and the people that you've seen in those photos, the hard yards, 1.1 billion contribution and growing to the state's coffers, 2.2 billion to the national coffers, and next to nothing for the MRRT. Mr. Treasurer, where's your money coming from? If our good Treasurer doesn't agree, why doesn't he enter the debate? Instead of saying we've got our numbers wrong, why not do what we've done, which is release our assumptions, give you our financial models, have a look, pick them apart. But if you're not going to reciprocate the transparency of a company with 50,000 shareholders, when you're a government with 20 million stakeholders, the level of transparency required of us at least to show the public your numbers, then how can we know if we're right or wrong? And assume we're wrong. Assume that there is something which is in the calculations which the government has refused to release and refused to release and refused to release, and the majors do end up paying more than what I'm demonstrating here. Then the fairness of what we're asking for in Canberra today, and what we will insist on with the independents, that we have an equalisation clause. It was a lot like you people may remember the wine tax. Wine tax was originally brought in as a great idea when the wine industry was booming. Perhaps not such a great idea today. But in the cycles of politics, the wine industry was pumping for a short time, quick, something's moving, tax it, and they brought in the wine tax. But they quickly worked out that it was negotiated with a really big multinational wine companies, and it hammered the small players. So they brought in a wine equalisation clause called the WET, and that meant that the small guys never paid a higher rate of tax than the big guys. Now that tax hasn't raised that much as a result, but it would have hammered the small guys. We're not saying that we're not prepared to pay more tax. That's really not our business. The publicly elected legislators can determine that. We trust that they know if you want to put a handbrake on the only part of your industry which is stopping your economy going into recession, that you're aware of that and you can certainly raise our taxes. But don't do it in a way that hammers our developing sector and would have stopped Fortescue getting up. When times are tough, we're thankful to a prosperous small business mining sector, and we don't want them taxed out of existence when companies like us, as you can see, get a virtual free ride.